The ETF market posted the first month of net asset outflows in February for 2 years amid the market volatility. Nonetheless, January and February combined still attracted net new assets of $64 billion thanks to a strong start to the year. That's according to ETF.com. Joining me now is Timo Toenges, who's in the business strategy team for BlackRock's EMEA, ETF and index investing business. Timo, thanks so much for joining us. Obviously, despite my intro, we've seen 5 years of rapid growth in the ETF market. What's been driving that growth?
So what we've seen is an increase in users of ETFs and use cases for ETFs. So on the user side, we can see both on the institutional spectrum, insurance companies, pension funds, highly sophisticated investors starting to use more and more ETFs, but also on the other side of the spectrum with financial advisors and even self-directed investors using more and more ETFs.
And do you see the size of the ETF market continuing to grow, or are we near some kind of saturation point?
So we think we're actually going to see an acceleration of the growth in the European ETF market. If you look at the numbers, the market has doubled over the last 5 years, but a lot of that growth has just come from last year. So the market increased by 40% last year alone. So this points towards an acceleration of the growth rather than a stagnation.
Do you see the European ETF market ultimately catching up with the United States, which at the moment it's some far behind?
So if we look at the data, we're actually following a very similar growth trajectory to that of the US. The US market is still a multiple of the European market, so maybe we'll catch up one day, but for now it's more interesting to see that we're following the same growth path, and that means that there is significant growth to come.
Now, there's been some criticism, particularly from Paul Singer, who said that ETFs could be in danger of devouring capitalism. What do you say to that?
I would say that it's an interesting point to consider, but if you then look at what share of the total markets ETFs make up, it is very, very small. In Europe, about 2% of total managed assets. In the US, getting closer to 10%. And there's been research paper over research paper debunking those kind of views.
What about the fact that we've been seeing this rise in volatility? Some say this is a stock picker's market.
We don't really see it that way as a stock picker's market. So ETFs and index investing in general is an investing style that works in all kinds of market conditions, and that's what our clients are telling us, and that's what we see in the flow.
Now, I know at BlackRock you're very much into innovation and creating new and exciting products. So perhaps you could talk to me about some of your most innovative new pipeline products.
So the most exciting areas, at least for me, are areas where we give our clients access to exposures and asset classes that previously were either impossible to access for them or incredibly expensive to access for them. Sustainable investing is an example, thematic investing is an example, but there's lots more.
What about robotics?
Well, that's a great example of a theme, so what we call megatrends. So these big shifts in the world which are going on, like automation, that we create indices around and enable our clients to access via an ETF.
And also, I think sustainability is another theme that you guys are very keen on. Perhaps you can expand on that.
So sustainable investing really is investing into an index that doesn't just look at financial returns, but that also looks at other considerations. And the spectrum here is quite broad. So it could be a basic exclusion of, for example, controversial weapons manufacturers, but it could go all the way to a fund investing in low carbon projects.
Okay, Timo, thank you very much. Plenty to think about there. That was Timo Toenges, who's in the business strategy team for BlackRock's EMEA, ETF and index investing business. I'm Victoria Scholar. Remember to head to our website or YouTube for plenty more content. Thanks for watching. We'll see you soon.